module, which is personal insurance, which is life cover, funeral policy, and estate planning. But yeah, we're almost at the end. We have a few more weeks left of the program. So yeah, let me share my screen. So today we are going to be looking at, so my main plan and dream for this module was for each of us to do R100 investment, or make your first R100 investment. Yeah, I think it's timed correctly around payday and people kind of getting paid and all of that to do that. And then they can follow the steps in this module, in this lesson plan to do so. I've chosen EasyEquities and Franc to look at as platforms. I've chosen these two specifically because I use them. I know them, I kind of trust them. And also I find that as sometimes EasyEquities might be overwhelming for a beginner, so Franc comes in and takes away that overwhelm because it's quite a straightforward platform. There's not much to do on there and there's not much options as opposed to EasyEquities, but we'll look at that together now. Let me just share my screen. And then I was thinking maybe we can start sharing. So whoever's done their budget for the month and wants to go ahead and do their R100 investment on either platform, we should start, we can start sharing kind of our screenshots and just accountability once we've made those transactions. I will do mine tomorrow and I'll share on the group, and it'll be great to see as many of us do the same. I think it'll be a fun, cool exercise for all of us to just kind of show that investing doesn't have to be this overwhelming barrier thing, because you can literally invest R100 or even less, but I've just chosen R100 as like an amount that I think all of us can afford to do. But if you can't afford to do R100, you can even do less than that. And the platforms that I've chosen to focus on allow you to do so. And also you don't have to invest on EasyEquities or Franc. If there's another platform that you want to use, feel free to do so. The notion of everything is that you are investing somewhere and you're investing that R100 that we're doing as a collective. Yeah. So in this is going to be quite short. It's going to be more step by step in terms of how to use the two platforms. I have added some little bit of information just to add a bit of more value to this lesson plan. So understanding the power of starting small and just kind of starting with what you have, and how over time you are today, if you're allocating R100, because that's all you can allocate, and you're building the habit of investing with the R100, in a year's time, let's say now you are able to allocate R500, it's going to be much easier to allocate more towards your investing because you've already built the habit of investing and you've started the journey. So when it comes and you have more disposable income to invest, R1,000 or even more, it's just going to become second nature to you. And so that's why I encourage you to start small with whatever you have, and R100 is a good kind of measure for the small, but it can be less than R100. But I think I just kind of like to use that amount as a rounded figure. So this part is speaking about that. It helps you kind of get over the fear of investing, especially because it's such a small amount. And you can learn through the experience that, as I'm saying, build up the habit of investing and get into it and manage your risk as well, because then you're only managing your risk with R100 as opposed to managing your risk with like a 10,000 Rand deposit, for example. So it helps you in that. And then it helps you kind of understand investing a bit better, the gradual process of wealth building. And that's why I said I like us to adopt a long-term thinking when it comes to investing, and kind of seeing the long-term growth strategy behind putting in consistently R100 and then increasing that amount to 500, 1,000, or whatever amount it is that you're able to do so in the future. So there's definitely such great incentive to starting with the small and building over time. And also it takes away that whole I'm waiting until I have X amount of money available to start investing. You know, it takes away that delay, and it kind of puts you in a position to start with the small and build over time. And then choosing an affordable investment option. So the two platforms that we're going to look at, EasyEquities and Franc, I've chosen as well because they are low cost. So the costs entailed to investing in those platforms is very low. They don't charge high fees, mainly because it is a DIY type of investment platform. Specifically EasyEquities, where you are the one doing the picking, you are choosing the things to invest in. They just facilitate the transaction. And so it's going to be a low fee type of platform, as opposed to maybe investing in a unit trust or going directly to a service provider, maybe like Allen Gray and stuff, where there will be higher fees attached depending on what thing you are wanting to invest in. And so I found with these platforms, it's much better because it is low cost. And the best thing to do, as we've mentioned in previous lesson plans, is to manage your costs and the cost of investing, and just kind of managing it is by choosing platforms that do accommodate and give you affordable investment options. And so EasyEquities is that platform, and Franc as well. And then this just kind of goes more into detail on the low cost and why long-term avoiding high fees really helps. And we did look at this in the module where we were looking at saving in retirement, and how much having high fees in your retirement annuity can affect you long-term. Same here as well, long-term affordability, high fees will eat into your returns, and you want to reduce the fees as much as possible so that you can get the optimum return at the end of the day. So script 3 and 4 is the guides. So if you click on the lesson plan, there's a link that's going to allow you to open the guides. Oh, it's taking you to my, okay, I'm going to need to update the links. I'm going to need to update the links so that you guys are able to download directly the step-by-step guide. But this one is for EasyEquities. So I've kept it very simple. I've added screenshots of each step, or as much screenshots of each step as possible, just to kind of help you. So this is the step-by-step guide to investing with EasyEquities. This is mainly for someone who hasn't invested on EasyEquities, or who doesn't have the platform, who's never used the platform. Those that already have the platform, this won't apply to you because you would have gone through these steps already. But the first step would be obviously creating an account. So downloading the app or creating an account online. I'd highly suggest downloading the app and having it on your phone as opposed to using their website. So you can either use their website or download the app. It's up to you. And then once you're on there, you would have to register. So they would ask you your personal details, your name, your ID, email address, contact, and then they'd have to verify your identity. So they'd ask you to upload a copy of your ID, photo, or I think maybe they'll ask you to take a selfie or photo of yourself as kind of a FICA regulation, just to verify that this is the person that is opening their account. And then after submitting, it will take a bit of time before they approve your documents. So here's a little screenshot of just kind of the page that you can expect to see when you are signing up and entering all your details. You'll be asked to create a username, a password, and all of that. It's very important to keep your password safe so you remember it, and also your username, because this is also what you'll use to log into your account afterwards. Then once that's done, you would need to obviously fund your account, because we are talking about investing your first 100. So you would need to obviously put in money. And so you can invest as little as 100 Rand. So here you would then go to the navigations listed on here to invest. And so I've added screenshots. So the first thing you would do, you would go to deposit funds, and I'll show you on my on the EasyEquities app now, just to kind of take you through. But these screenshots as well should help guide you. So with your account, you'll get a specific reference that is attached to your specific account, so that they know if you are depositing money, who to allocate it to. And so this will apply for your EasyEquities ZAR account, your TFSA, and so on. Your references will change depending on the account you want to deposit in. But this is kind of the screenshot you would see when you are trying to deposit funds. You would choose the bank. I bank with Absa. It's best to choose the bank that you bank with, so that the transaction is almost like immediate. It might take a few hours. Sometimes for me, I haven't had the issue where it delays. I would maybe deposit in my account, or transfer into this account, and then it will take about 10 minutes before it reflects on my EasyEquities account. So it's best to choose the bank that you use, so that it allocates it almost immediately. And then this is kind of the banking details you get. And then the reference, I've edited out the reference here not to confuse anyone, because this is my reference. So you would use your reference that you would get. And then you can choose either you want to do an EFT or a credit card deposit. And then whichever one you choose, that's the one that you would use, depending on either you're doing an EFT or credit card. I've always done EFT because it's the same bank. So I would deposit into the ABSA account, and it takes quite quickly for the funds to reflect. Once you're done with that, then you would explore investment options. So EasyEquities has quite a wide range of investment options, and we're going to look at them in the app right now. I'm going to show you guys. And so it just kind of depends on what you're looking for and what you're looking at. I will always preach ETFs, especially as a beginner, and I'll show you guys the different ETFs that exist and the ones that you can invest in. So there are shares, obviously individual shares, there are ETFs, and there are also something called bundles, where they would bundle and put together further bundles of either shares or ETFs within the portfolio, within the platform. I just find that it's easier to just go the ETFs route instead of going the bundles route, but either or is fine. You just want to make sure that you're not over diversified when you are choosing bundles. But we'll look at that now. And so this is kind of the web page that you would go to. So once that money reflects into your account, you would have that amount available to invest. And then this is the web version. On the phone, on your app, it might look a bit different. So here they will show you browse all shares. And so they will kind of show you equities, bonds, property, crypto, commodities, and the shares. And then they'll show you managed products, which are ETFs, unit trusts, and managed portfolios. And then whichever one you choose, depending on which one you chose, you would get the option. So I made an example here for ready-made portfolios, and then these are kind of the portfolios that exist in the ready-made. So there's bundles, there's unit trusts, there's ETFs, and then there's active portfolios or passive portfolios. I know it sounds like a lot of options, but I then go ETFs, and then once you go ETFs, these are kind of the number of ETF options that show up. But we'll look at it now on the app quickly together. But this is kind of step by step of if you were going through this process of being on this page, choosing ready-made portfolios. Then once you get here, these are the options you'd get. And then if you select ETFs, then these are the ETF options that you would get. There's obviously way more, but I just screenshot the first options that showed up. And then you would make your first investment. So then you would choose what ETF to buy, which is I've showed an example here with investing in the top 40 SaaS stocks. And so you'd kind of choose where are you investing it. Are you investing it in your ZAR account or in your TFSA account? And I'll explain to you what the difference is between these two on the EasyEquities platform. And then I chose the SaaS stocks ETF. So I did this in the evening when the markets were closed. So as you can see here, it says closed. So I wasn't able to buy any at the time because the markets close, I think, at 5 p.m. every day, and then open up at 6 a.m. the next day. So there's that trading period of 6 to 5. I think it's 6 to 5 every day. So this shows you kind of the performance of the ETF, the top 40 ETF. These are the top 40 listed South African JSE listed companies. The performance of it is that it's up 2% in the month. So it's up compared to last month on the same day. It's up 2.2%, and daily change, meaning that from the previous day to the current day when I was looking at it, it's up 1.5. So it shows that it's currently in recovery, and it's going up. As you can see here, there was a slope around the 9th, around maybe I'd say the 10th, 11th of September, and now the share is kind of growing and recovering. And so this would show you the selling price, so the buying price and the last price. So I'll explain that as well. And then here is where you would input your information. So we are investing 100 Rand. So you'd put in 100 Rand, and then this will calculate the number of shares. So you would get 1.2664 shares. And what this is that it looks at the current price for the share. So the last price, that's 78 Rand 71, and you would calculate, okay, 100 Rand is going to give you one share because it's 78 Rand. So you are obviously investing more. If you're investing 78 Rand 71, you'd get exactly one share. But because you're investing a bit more, then you get a part share or a fractional share, which is 2.664, which is the fractional part. But we'll look at that now. And then you'd kind of monitor your investment. And I've kind of added a screenshot here on that. So this is a screenshot of my investment. So I currently own about 68 shares. In the top 40, average price is that. The current price, so the current price, which is the 78 Rand 71, which is then giving me that growth of 16%, because on average, I bought my share price or my shares at a lower price than what it's currently at. And so it's giving me that growth. And then you would reinvest your dividends or make more deposits to grow. So from that 100 Rand, you would add more. Before we go into the platform, is there any question? Okay. All right, I'm going to stop sharing because I want to log into my EasyEquities account. Okay. Okay. Okay, I'm going to share now. Okay. Okay, so this is on my portfolio. So that's what I was saying, that reference. This will be different depending on your specific reference. And so you would go on here, then you would choose the bank, whatever bank it is that you bank with, and then they would give you the banking details and then the reference. It's very important to use the reference that they give you in the correct reference. Otherwise, they will not allocate your funds in the right place. And in the right account, and you don't want that, because then it's like a long process of sending proof of payment and then getting them to allocate the funds in the right account and all of that. So it's best to just always use the right account. So this is the EasyEquities ZAR account. The EasyEquities ZAR account means that it is the EasyEquities South African account, meaning that you would be investing in your South African EasyEquities account and in South African listed companies. So that's what this EasyEquities ZAR account means. So it's the South African account, and anything that you invest in it is South African listed companies that you would find, and I'm going to show you. And then, so when you fund this account, if you use this reference, then the money that you are putting in will go to the EasyEquities ZAR account. So for example, if you want to fund your TFSA account, see now the reference is different. So for me, my ZAR account reference is that 1657602. But then when I'm going into my TFSA account, the reference is different. And so when you allocate into your TFSA account, this is the reference that you would use to then allocate correctly into the TFSA account. And the TFSA account is the tax-free savings account. So anything that you invest in this account, keeping that you are within the limits of the TFSA account, is tax-free. So I always advise that if you're a beginner and you want to start investing, invest in your TFSA account. And the nice thing about EasyEquities is that there's so much that you can invest in your TFSA account. So instead of prioritizing the ZAR account, I would focus first on the TFSA account. Then once you've maxed out your TFSA, then you can go and start depositing in your ZAR account if you do have more. And so here they calculate for you. So they would say contribution limit is 36,000 tax year contribution. So I've only contributed that much this year to my TFSA. And the remaining is that. So the TFSA contributions run per tax year. So the tax year starts on the 1st of March up until the 28th of February the following year. So I've got until 28th February to max this out and to invest this full 36,000 Rand. So that's the nice thing as well, is that you are able to keep track of your contributions just to ensure that you don't go over the limit, because if you do go over the contribution limit, you will get heavily taxed on the extra that you've contributed on. I think the current rate is at 40%. So what that means is that if I were to invest maybe 40,000 Rand in my TFSA account, the extra, the 4,000 Rand, any returns I get from that extra 4,000 Rand, I'm getting taxed at 40%. So that is, so you want to just make sure that you keep within the limits. So that's that account. And then the USD account, this is JSE list. This is the New York Stock Exchange listed companies. So now you're tapping into the US market, and then this would be your reference for that account. And so you would choose how you want to do it and how you want to pay. I always go EFT, and it just makes things easier. Is there a question on this page? Okay, and then there's Easy Properties, which is
No question. Sorry, Mimi. I just do want to also emphasize that the reference is very important.
yeah.
I did have an incident where I didn't put it, and I had to send like proof and everything that I had deposited, but it didn't take too long. I think it took
Okay.
a couple of hours to get it back. But I wanted it to separate between my two the ETFs and the other one, but they all just put it in one place. So I think it
Yeah.
is important to just put it in there.
Yeah, I agree. And also the nice thing is that you can do inter-account transfers. So for example, if you by mistake allocate money into your ZAR account, but you're actually wanting the money to go into your TFSA account, you can then transfer within their accounts. So you would go here into inter-account transfers, and then you would pick, do I want to transfer from my ZAR account into my TFSA, and then it will show you how much is available to transfer, and then you would transfer in there. So that's also kind of the nice thing about EasyEquities as a platform. But yes, I do want to say that it's very important to make sure that you are allocating it to the right place. Then once you've allocated your money and your money now reflects, and it will show in your available funds, depending on which account you deposited in, then that available funds is now available for you to invest in. So now you would go to invest now. And then that's the page that I showed you. So one thing I also like about the platform is that they will kind of guide you in terms of giving you information on what to invest in. So as a beginner, they've got a wealth of information, blogs and stuff, like on information on different things. So maybe you want to look up a specific company, or you want to compare something, you can go to their resources and they can help take you through that. So they've got really great platforms and resources to help you kind of, as a beginner, determine what to invest in. I really do encourage that you use the information available that they have created just to kind of help you. Also, another thing is to look at the Thrive investments. What they Thrive investments are is investments that they have selected as a company that maybe are going to do well they're investing in, or that the community, us as investors, are mainly investing in, or whatever it is that they've used to measure. They would add those in the Thrive, and then they will kind of give you some incentives for investing in the Thrive platform type of in platforms that is in the Thrive, for example. So yeah, here is it now. I'm not seeing it. Yeah, and so also the Thrive thing is like a new, it was a thing that they've had for a long time, but now they've started in introducing kind of Thrive levels, because they charge 25 Rand per month platform fees. So what that means is that each month they would charge platform fees, but there is a way that you don't they started it last year. So there is a way that you don't get charged these platform fees depending on the Thrive level that you are at. And you can save on fees by doing specific things. So there's certain things here where you can earn, where you do Thrive education, and you can earn referring a friend, and you can earn financial health, which is where you are consistently using the platform and investing consistently, depositing more than you withdraw. Product commander, there's like different things that they have listed here that helps you earn, and that helps you increase your Thrive level as you use the platform. So I would implore that you do that as well, so you can save on the 25 Rand platform fee per month. So yeah, when you are here and you've kind of browsed through, so here is the shares, and then this is the managed. Let's go to the shares and see. So here at the top, you can filter by account kind of to see what shares. So these are the ZAR, South African market shares. These are TFSA shares, so things that you can invest in the TFSA. These are USD, which is the United States market, crypto, property, European market, the United Kingdom market, and the Australian market. So you can invest in all of these markets in the EasyEquities platform, which I really like. And I understand that as a beginner, it can be so overwhelming because there's so many options, you don't know which ones to pick. Right. So if we look at the South African market specifically, for example, and they've separated this by different categories: equities, meaning individual shares; ETFs is the ETFs, crypto assets, property, bonds, and commodities. So depending on what you're looking at, you can select between these. There's also different themes that they've selected here. So this is the Thrive that I was talking about. So these are all assets or shares that you can invest in that is part of the Thrive kind of companies that they've picked. And these are all, so this is an ETF, this is an individual company, and it will kind of say on each one. So this is an ETN, ETF, ETN, individual company. Purple Group is the company that owns EasyEquities. So obviously that will be Thrive, and then some other individual companies and shares. So if you invest in any of these, I think you earn some points as part of the Thrive program. So you can do that as well. But let's go back and just kind of see. And then here's some themes as well. So you can select certain themes: personal goods, media, industrials, and all of that. Let's just go to equities just to see all the companies. So here are some companies that are listed in the South African markets, or companies that are in the South African JSE. Some of them you might recognize, like We Buy Cars, Shoprite, Standard Bank, Nedbank, Capitec, Absa, First Rand, which is FNB, AB and Bev, which is the alcohol Bev company, RMH Property, which is one of the biggest holding companies for property. They have a lot of rates. They do rates. And then Sasol, we all know Sasol. So, I mean, there's a long list of companies. And so it can get very confusing, very overwhelming really quickly if you're a beginner, because there's just so much to choose from. Like the list goes on: Shoprite, Pick and Pay, Spar, Dis-Chem, some companies with Tiger Brand, Sea Harvest, Rainbow, like RCL. The list goes on: Mondi, Sappi, some companies that we know, like, and trust. And so this route of picking individual companies as a beginner, I would caution against, unless obviously you want to invest in certain companies that absolutely go for it. I am not saying don't do it, but I'm just saying, if you are someone who may feel overwhelmed by picking the right stock and feeling like you need to pick the right one and you don't know what to do and all of that, picking individual stocks might be a bit tricky and be overwhelming. And so my route is always ETFs, but in your TFSA, because you want to take advantage of the tax benefit. And so tax-free savings account, let's see what you can invest in. And same in the tax-free saving account, these are kind of the assets that you can invest in. Let's see if we can see all. Okay. Okay, let's look at ETFs. What ETFs are in the tax-free savings account? So these are the ETFs that exist and that you can invest in. Let us look at, so here, for example, before I go on, there's the Satrix top 40. Then there's another top 40, Signia top 40, right? What's the difference? Or why are they two? The reason for that is that they are under two different service providers. So this Satrix, this top 40 is by Satrix, and this top 40 is by Signia. And the main difference of these two would be the fees attached to it. Essentially, that is the one of the main differences. So if we look at the Satrix top 40, no, sorry, made a mistake. So if we look at this Satrix one, for example, yes, listed JSE companies, let's just say 100 Rand. Oh, it's not going to allow me to do it. Okay, yes. So if we look at this one, the Satrix one, its last price was captured at 80 Rand 23. The price performance differences might differ slightly. There shouldn't be a big difference between another service provider because they are tracking the same companies. The slight difference could be that the one captured it at a different time compared to the other one, or the movement of the other one is a bit different, but the price difference should be very slight. There shouldn't be a big difference between the two. So for example, if you want to invest 100 Rand, and I want to actually show the difference here. So if you look at this template that we looked at, this tutorial that I did, the last price was 78 Rand 71, and I did this yesterday. But right now, the Satrix top 40 price is at 80 Rand, meaning that during the day there has been a movement in this share price, and you can see that it's still climbing and going up. And so that is why it's at 80 Rand 23. So the price is never the same. It always changes. There's always a daily movement in the share price of that specific ETF or share that you want to invest in. So the main difference would be the cost. So investment costs, and here's a breakdown of the investment costs. So if I want to invest 100 Rand buying the share, these are the costs. So it will cost me 39 cents. The broker commission is that 25 cents. A settlement and admin, 8 cents, investor protection levy and admin, and then there's VAT, and then there's security transfer and admin that didn't apply to this. So that is the breakdown. So this is how much it would cost you to invest 100 Rand. So what this means is that if you had 100 Rand available in your account, you probably wouldn't be able to invest 100 Rand fully because 39 cents would need to go towards the transaction. So you would need to have 100 Rand and 39 cents to cover the investment cost. Does that make sense? Yeah, so they calculate the amount due, and then that's where they would add. So you need to have at least a little buffer, maybe 105 Rand, just so you can cover the investment costs entailed to investing. And it will always tell you if you have it in enough funds or not. So then what I would do here is I would like reduce this to 99 Rand 70, and let's see, okay, that's still a bit more. So you kind of, if you wanted to get to 100 Rand exactly, now it reduces the amount you have available to invest, because then if you only have 100 Rand available in your account, you obviously can't invest 100 Rand because there's fees entailed to that. There's investment costs. So let's look at that. So that was 39 cents with the Satrix. Let's see what the Signia investment costs would be. So Signia is the top 40. So then last price was 79 Rand 86, whereas the Satrix one is 80 Rand 30 something cents. So there's not much of a big difference. There shouldn't be a massive difference, but there would be differences between the two. And then here, we are investing the same amount. So the cost is 39 cents as well, 25 cents, 8 cents, 1 cent, 5 cents. So they actually are the same price. They charge the same investment cost. So there isn't much of a price difference between the two. The only difference would be the share price. So this one is trading at 79 Rand 86, and the other one is trading at 80 Rand 36. So the main thing to do would be to compare the investment cost and then compare the share price and the performance, whichever one you prefer. Then you would invest in that one. But the main decider for me is usually the investment costs. If the investment cost is higher on the other one and it's tracking the same index, I choose the one that's a bit cheaper in terms of investment costs. Is there a question? Okay, and then with the S&P 500, let's just see. I know that there is a difference with this one. I just want to check something here. So when it comes to picking ETFs to invest in, right, the main thing is to not over diversify. And what I mean by this is don't invest in the S&P 500 from Signia. I mean, the Satrix Top 40, for example, and then invest in the Signia one. Those are two different ETFs tracking the same thing. So now you've over diversified because you have invested in the same thing across two ETFs. Rather, pick maybe 4 or 5 ETFs that you want to focus on as a beginner, that you'll split your money on, or just focus on one, depending on how much you have available. So for example, let's say you have 1,000 Rand to invest. Maybe you can choose, I'm going to pick 4 and I'm going to put, or 5, and I'm going to put 200 Rand in each of these, and that's the ones you will pick. So what's a decider? Local, so would be good. So this one would be good because that's a local. International, which would be the S&P 500. The S&P 500 tracks the top 500 performing companies in America. So local, international, and then an industry difference. So maybe you want to choose a property one, or you want to choose a technology ETF that's in a specific industry. And then the fourth one, maybe you want to choose is a dividend ETF, so an ETF that's specifically tracking companies that pay dividends and has grouped them together. And maybe the last one you want to pick is, which one, Jim? Let's see, what is the other one? Is it? Oh, and a bond. Maybe you want to do a bond ETF. Instead of buying individual bonds, you want to do a bond, and this is the Satrix bond ETF, and that's kind of how you split it. So you would do local, you do international, you would do local, international, industry. You would do. My brain just stopped. What is the fourth one I said? Local, international, industry. I forgot the fourth one, and then kind of a bond one, or dividend, if you want to track ETFs that pay dividends, or dividend ETF, which is this one, the Divi Plus. This ETF it tracks companies that pay dividends, so it's a dividend paying ETF. And so it's a dividend plus index, and it tracks all the companies that pay dividends, and each one will explain. So this is the South African, it consists of 30 companies selected from the JSE top 40 and mid-cap indices, and they expected to pay the best normal dividends over the forthcoming year. So these are companies that pay the best dividends, and then you would buy that ETF, for example. But yeah, just keep it very simple. Don't over diversify. Don't complicate it for yourself. You don't have to pick 5 ETFs. maybe you might choose, you just want to pick 2, local and international. So you want to have local exposure and international exposure. That's also fine. Or maybe you want to do 3 or 4 or whatever it is. It's up to you. But essentially, you never want to have more than 5 or 6 ETFs in your portfolio. It just then ends up overlapping with each other and creating an over diversification. As much as you can tell them apart and say this one is specifically for this one, keep it at 5 or 6. 7 or 8 is just too much, and it just spreads. As much as I say spread your risk, diversify, it just spreads your investment too much. It makes sense to focus on 4 or 5 and consistently invest into those different ETFs and different industries. Whereas if you've got 8 ETFs, it's almost near impossible to grow them at a rate where you can see real return, unless you have a lot of money available to invest. Maybe you're investing 10,000 or more each month, then it kind of makes sense for you then to diversify in that way. But even then, I would caution against that, because you're just not getting the best out of that specific investment. Rather, concentrate your funds into 5 and just make sure you're managing your risk. Follow all the steps that we looked at in the previous lesson plans of checking your portfolio, balancing things out if you need to, but just focusing on the 4 is best. I have international exposure with the Japan and the China markets as well. Those are emerging markets, so that's a high risk because that market is we're not seeing great returns at the moment. But Japan and China are emerging markets, so you don't even need to do the Japan one specifically. You can do emerging markets. Let's say you have a bit of risk appetite and you want to invest in something that is still growing, something that's not fully established yet. So you can look into that. I know I'm saying a lot and I don't want to confuse you, but I'm just kind of showing the options that you have under your TFSA. So that is my approach. If you are going the EasyEquities route, deposit into a TFSA account and then focus on 1 or 2 ETFs to invest in consistently. Especially if you have 100 Rand available to invest every month, I would caution against trying to pick or spread that 100 Rand across 4 or 3. I'd just say pick 1 and invest consistently until you have a bit more income available to invest and spread it. Then you can start looking at the other lists that I mentioned, which would be the international, which would be the dividend, which would be the industry, and then maybe a bond or a technology or whatever. But that's essentially the approach that I would say you guys should go for, instead of picking and choosing an individual company and trying to track it. And it just becomes very overwhelming really quickly, and it also exposes your portfolio so much. Is there a question? Maybe a question around how to pick, which ones to decide on, which companies. I don't know if you guys have any questions on that. Hello, are you guys still there?
Yes, all good on my side.
Okay.
Yes, it's all good. I do
Okay.
have a question.
Yes.
I just downloaded the app. I'm going through the app and I'm like signing up, but there's no way where it says it has to verify like my accounts. I've put everything. Is that fine? Or I have to verify, like I'm going where I should be verifying my account?
Yeah, so they'll send you an email with the progress of your account, and they will communicate with you if they do need documents. I know they should need your ID and to verify that your ID is you. I don't know what their process is now. I mean, I set up my account long ago, so I'm not quite sure what their sign up process is, but I know they should take some time to verify. So maybe just look out for the email communication.
Okay, cool. I'll
Yeah,
do that
to
now.
see what else they require from you, which I'm not sure if they've changed the process, but when I was doing my research, that was kind of the process, that they would need to verify your account first, or your documents or anything, and then get account yakho izoba active ukuthi ukwazi ukufaka imali.
All right. So enjoy.
Okay. Cool. All right. Individual shares. Does anyone want to look at individual shares, or you guys are happy with the ETFs conversation?
I am. I thought it was going to be a bit more complicated than what it is.
It's only complicated when you go the other route. I'm showing you the shortcut. This is called lazy investing, and this is the lazy way to build wealth. No need to overcomplicate things. At the end of this module, I do want to create maybe a little ebook speaking to these tips and steps that I advise beginners to do, especially in ETF investing. And maybe if you were to go to another finance coach or someone else who's teaching on investing, they might have a totally different approach to this. They might teach you how to look at individual shares and how to pick a stock, and that might be their approach, and maybe you choose to go that route. But my approach and what I teach you guys, because this is what I do and what I found the easiest and best and most valuable way, especially for beginners, is the ETF route in your TFSA. There's no need for you to be investing in your ZAR account when you have an option to get a tax benefit in your TFSA. There's no need for you to overwhelm yourself as a beginner to pick which stock to pick, because that's always a barrier for beginners. They feel overwhelmed. They're scared to make the wrong decision. They're scared to buy the wrong share, and so they end up not investing at all. So ETFs takes away that. You're already investing in a basket of shares that is diversified already, so you don't need to stress yourself trying to create and pick different stocks in different industries to diversify your portfolio. You're just buying one stock and just focusing on that. And then as you build the habit over time, then you can start diversifying and putting your fingers in other parts. But as a beginner in the beginning, it just makes so much sense to do it in the way that I teach you. And this is not to say this is the only way or the right way. This is just the way that I found works best, specifically when we are talking about beginner overwhelm when it comes to investing.
Another question that I have, how am I gonna word this question? Like, what would you advise? Let's say, fine, we've bought like stock and whatever. Do you check on it on a daily basis, on a weekly, bi-weekly basis? Like, and if you see like the market's been unstable, what is the sign that shows us, okay, no, this is normal? Like, I don't know if thinking I don't know these things. So
Yeah.
like, how do you know, no, it's fine, this is normal, or this is bad?
Okay, that's a really great question. The first one is, how often do you check your portfolio? So my thinking around there is your decision around checking your portfolio, right? Why are you checking your portfolio? Are you checking your portfolio because you want to invest? Are you checking your portfolio because you want to make a specific decision? Or are you checking your portfolio just to see the performance of your portfolio? I think each of those different reasons will give you a different result. So if you're checking your portfolio to invest, then obviously you're looking for investment opportunities. For example, let's say you want to invest that month, and you maybe have picked your ETFs that you want to invest in, but maybe you are seeing opportunity in one ETF. Let's say you are investing in the S&P 500, the Signia S&P 500, and you maybe hadn't planned to invest in that portfolio at that time, but you are seeing, oh, the share price is down. So a lot of the times you'll hear this line around investing: buy low, sell high, as a strategy. I don't follow that strategy. I don't think it's a sustainable strategy, and I don't think it's a strategy that makes sense, especially if you're a beginner. But essentially, there is truth to that. And what I mean is that if you buy your share, for example, let's say it was on the 6th of September, it was at 96 Rand. If you bought it at 96 Rand, on the 2nd of September, it was at 101 Rand, and it dropped to 96 Rand, right? A lot of people would see that as a negative because the share price is going down. But investors see it as a positive. It's almost like your favorite share or your share is gone on sale. It's like you're finding it on sale. And so what the philosophy of buy low, sell high is that this would be a good opportunity to buy that share at 96 Rand. Because then when it goes high, it's 96 rand, it's 98 rand, but then now it's recovering. Now it's back in the 99 rand, whatever. If you had bought it at 96 rand and now it's at 99 rand, almost 100 rand, that difference is your growth, right? That difference is your share price growth. So you would see a gain or a growth because you bought it at this price and now it's going high. Why this is a tricky method or system to follow as a beginner is, how do you know as a beginner when is the best low price, right? Because if you look here, it went down to 96 rand and then it went up again, and then it went down to 97 rand again, and then it went up, but then it's now gone down from that price, So the share price is fluctuating and moving so many times that it's difficult to time and say this 96 rand was the best low. But if we look at it, if we zoom out, there was another low that was better at 95 rand in May. Are you with me? So if you are always trying to time purchases in the market at the lowest low, you're gonna miss it completely. And that's called timing the market, because who knew? You didn't know that low, that 95 rand low, is the best low. You only know that now today because you can compare it to this low and you can compare it to this September low. Then you can say, oh, this low was the best low. But you've missed that opportunity and that window. You can't go back to May now and invest at 95 rand. You also can't go back to the 6th of September because that was the second best low at 96 rand. So it's difficult to time it. And so what I'm saying is, if you are checking your portfolio and you are finding that there is a share that you were intending on buying at a low price, meaning it's lower than what it was yesterday, or the price is cheaper than where it was before, then it's worth investing in it and getting it at that low price. But don't try and time your purchases and your buying, because you're never going to get this 95 rand back. Even let's go a year ago. Look at where it was a year ago. 79 rand last year, October, this share. So the best time actually was to buy it when it was 79 rand last year. But you can't go back to that time. Are you with me?
I definitely
so
get you.
Confusion is that people want to teach beginners on buy low, sell high, but where is the best low? Even then, in October, this 79 rand or 78 rand, 79 rand, no one knew that it was going to go there. If you bought it at that and you held it, then you're in a best position now because you are seeing the growth from 1 year ago buying that share. But when should a beginner know? Like, as a beginner, when who's finna at that price? So it gets overwhelmed really quickly. And that's why I like the notion of invest, whether it's high or whether it's low. Specifically, if it's low and you were going to buy it, then it's like you're getting it on sale. You're getting a discount for the price of it. But it's just difficult to know. And if we go back max, there was even a period where it was even lower. Best time to buy the share was in 2017 because it was 37 rand. So even that 2023 70 rand, 60 70 something rand is not even the lowest. The lowest was at the beginning. So you can't go back to 2017. All that time has passed. And if you look at the performance of the share, is as much as there are lows happening, as much as the share price drops and there's big drops, Leonard was COVID, so that's why it dropped so much. It's still climbing. Do you see that? It's still growing. It's still going upwards. As much as it does this, it recovers and then it continues to grow. So in a period of a year, yabona ukuthi ngo-2023, it was literally operating below the 100 rand mark. And now it's starting to reach above the 100 rand mark. And I anticipate that going forward, it's going to go over the 125 rand mark. But it's going to do this as it goes up. It's going to keep doing this. And so that's the art behind picking individual shares, is that abantu pick them individual shares, they analyze this graph and they analyze the best time to buy and they try and complicate it. And it's just a messy situation. So as a beginner, I would highly stay away from that. But going back to your question, so you are now checking your portfolio because you want to buy, and let's say you want to buy this ETF, and you find it at this price. It's best to buy it at that price because it's now cheaper than what it was the previous day at 100 Rand. And so history is showing us that this share price will continue to grow. So it makes sense to invest in it because izoqhubeka ikhule. Yabo, now for the first time, it reached over the 100 Rand mark by going above 100 Rand, in 2024. Next year, it's probably going to be sailing and growing again. So this is a great share to invest in because when you look at history and performance, it's doing really well. It's growing at a really great pace, right? And so this would make sense to invest. So looking at your portfolio when you want to invest, and then finding opportunities where to invest within your portfolio. Don't overcomplicate the investment process now by every time you're going in, you're trying to find shares that are cheap. It's gonna confuse you. Stick with what you're investing in. If you've picked your 5 shares to invest in or your 5 ETFs to invest in, look at each one of them when you are looking into your portfolio to invest and see which one has the best opportunity to invest. Best opportunity would be, is there a low price or has the share price dropped? If that's not the case, then obviously you will just pick whichever one. And that is called Rand cost or dollar cost averaging, which means that regardless of what's happening in the market, you will invest in that specific thing. Whether the market is high, whether the market is low, you will continue to invest because that is your strategy. Your growth strategy or your plan strategy is long-term investing. Let me go back. Then the second time you would look at your portfolios to make a decision. So for example, when COVID hit, a lot of the market was very unstable, market crashed because there was so much uncertainty in the market. And so in market is mainly driven a lot of the times by our perception as the consumers and as the people in the market, so businesses, governments, and all of that. And when COVID hit, it was a new thing. We'd never experienced it before. There's a lot of uncertainty, a lot of market turmoil. And so we saw a lot of decline in a lot of the company, in a lot of shares, in a lot of company shares. And so the next reason why you'd go into your portfolio is to make a decision. Now, all of your shares are down. What are you going to do? Are you going to sell? Are you going to leave, wait it out? What decision do you want to make? It doesn't also have to be in situations of COVID. It can be that maybe you want to make a decision around a specific share or ETF that you own. Maybe you're not getting the returns that you're anticipating and wanting. Maybe you want to sell it, or maybe you want to make a decision to reinvest your dividends. So instead of receiving your dividends, you want to reinvest them back. So that's the second reason you would open your account, right? And check your investments. The third reason, guys, my brain today, Sana, I forgot what I said the third reason was, but essentially, those would be the decisions of, are you investing, looking at investment opportunities, what to invest in? Second one, do you need to make a decision? Is there something happening in the market? Maybe, or you just want to make a specific decision about a specific ETF or share that you own, either to reinvest your dividends or to sell because you're not happy with the returns. It's all up to you. And then in terms of how often, now, the how often will be answered by the reason. So if you're wanting to invest, if you invest monthly, you would go into your portfolio and look at it monthly. If you want to make a decision around one of your investments, it makes sense to do it when you are investing because you're already in your portfolio and looking at your portfolio otherwise. So that would be kind of the good time to do that. But for me, essentially, it doesn't make sense to be checking it every day because if you're checking it every day, like, why are you checking it? If it's up, what is your decision? Okay, you're happy that it's up. But if your portfolio is down and you're checking it every day, do you see Uguti Izolo when I was looking at the top 40, the share price was at a different price. It was at 78 Rand, 71. And if you went in yesterday, you would have seen maybe the share price is down, but today it's at 80 Rand, so now the share price is up. Imagine you went in yesterday, it's down what daisa because you are scared it's down. Then today it recovers at 80 Rand kind of thing. And so you want to take away the consistent checking if there's no reason behind it, because the share market is going to fluctuate. It's going to move every day. It's doing this, going up and down every single day. And that's why you need to have a long-term view and approach to your investments. checking it every day, really, for me, I feel like it's going to cause unnecessary overwhelm and stress to you unless there's a specific reason behind checking and looking at your investments every day. Does that answer your question?
It definitely does. And it also answers, because I was gonna ask, like, let's say Ngobubushu, sometimes the market is unstable. How do you come about like to make a decision? And also with the dividends, so do you want to reinvest the dividends? Or we try to do money.
Yeah.
So
One thing that I can say is when you do have a long-term mindset of investing, you don't want to be irresponsible about what is happening. For example, COVID hit. I'm going to use COVID because that was the one time where everything went crazy, right? When COVID hit and everyone's investments were down, like I think at one point my investments were down like 20%. It was like insane. People were panic selling, right? Because they like, it's so much uncertainty. So people were selling and kind of getting out. And then some people like myself saw it as an opportunity to be like, wow, so many shares are on sale. Let me buy more, let me invest more, right? And so those that had the disposable income and the money available were investing and buying more. And now they're reaping the benefits because the market has recovered. But in that situation, when the market is crashing and things are going south, it's best to look at your investments and decide, is this what's currently happening? And the fact that this share has dropped or whatever, is this temporary? Meaning it's something that is with COVID, it affected everyone, literally us globally across the world. So looking at your portfolio and seeing all the companies down shouldn't shock you because it's across the board, right? It's affecting everyone. But if it's something that's specific to that specific company, and maybe in that industry, for example, let's take Sasol as an example. In the mining industry, all the other companies are doing well, right? They're thriving, they're performing, they're finding sustainable ways of making money and producing, of mining, a safer way of mining or whatever it is. And, there's prospect, the market is in favor of mining, but Sasol is not doing well and it's declining. Then there would be a cause for, let me look into what's happening at Sasol. And then you'd make a decision. Sasol's down, mining's up, mining's doing really well. Other mining companies are doing quite well. And that's why I always say, investing is going to always require a step further from you. It's one of those things where unfortunately you can't afford to be ignorant or can't afford to say angas kind of thing, especially when it comes to things that you have invested in. It's your onus to read up and know a little bit more about the companies you're investing in. Know just a little bit more about Sasol. Just don't know just Sasol, but just kind of know a little bit about what's happening with Sasol. What's the news saying about Sasol? Because it affects your investment and your decisions at the end of the day. And so maybe you see, well, it's okay, Sasol, they're not making great decisions. Maybe they're signing illegal contracts, or now they want to be bought up. Whatever is happening, whatever scenario is going on there, then you can use that as a decider of, do I want to hold on to Sasol? Because I do believe that maybe they will turn around, and that's why I say, e-market is also our perception. Perception to as our consumers and as abantu who have invested. Because if we all selling Sasol, what's that going to do to Sasol's share price? It's going to drop it, right? Because we're all selling and pulling out. No one is putting money in. No one is investing in Sasol and giving Sasol money, saying, we believe in you, Sasol. Everyone's like, I pulling out. And so when more people in the market, the less demand for Sasol, the less the price of Sasol is going to be. And so you need to decide, is the selling of Sasol and what's happening with Sasol something that's long-term? I know that kind of requires additional application. There's no way of you knowing as a beginner if what's happening with Sasol is going to be long-term or not. So it's kind of based on you. Are you comfortable going back to your risk assessment? Am I comfortable with holding Sasol with what's going on? I don't really know if it's going to recover. And guys, decision, maybe let me just sell a little bit of Sasol so I don't own so many shares. I'd rather maybe only, if I have 20 shares, I'd rather only own half. So I'm going to sell half or whatever it is, it does. Are you with me? So that's kind of the thinking that you would take on when it comes to individual decisions around something happening in the market and around the markets being unstable. At some point, markets will always be unstable, but the instability of the markets will always affect one industry the most as opposed to other industries. So there'll be industries, for example, when the interest rates were very high, the industries that were being affected the most is probably essentially the property industry, right? Because it's interest rates are through the roof. People aren't affording to buy property because it's so expensive. Interest rates are high. And so maybe that was one industry where they weren't seeing the most returns for property investing and just kind of the surety around property, because the buying and the purchasing power is really, really, there's not enough money going around. And so in that market, there are other industries that see a gain and see an increase because maybe they're an essential company, like maybe Pick and Pay, or Pick and Pay is not the best example, but maybe it's Checkers, ShopRite, and people are now, like, with the less amount of money that they have available, with interest rates being high and inflation being high, is that they're prioritizing on buying food, right, and buying the essentials. And so in that market, same market, property is not seeing a good return, but essentials like ShopRite or other companies that are within the essential sector are seeing an uptick because that's where people are flowing their money and focusing their money. But even then, even if they do see an increase, they're probably not seeing a big increase, right? Because even though you have less money available to spend, you are only focusing on the absolute essentials. So I'll start saying Jacob's coffee, coffee, for example, So that's obviously less money you're spending at Checkers, so they're not seeing that great return. But as opposed to a property company, Checkers is seeing an increase, or ShopRite is seeing an increase, or is stable in that market. So you also need to assess it in that way. Okay, what's currently happening in the market? Okay, interest rates are high, inflation is high. What industries will be affected? Okay, do I own any shares in those industries? What decision am I making? And maybe you might decide, actually, I'm going to wait it out because interest rates will not always be high. They will drop, which we have seen. The interest rates have come down. And so there's a recovery happening in industries that have been affected by the high interest rates. I know I've said a mouthful,
Got
but
it. No, it's actually really helpful because if I didn't know, I think I would have been more impulsive in those
okay.
situations where, when, especially on the news, like once, there's something, oh my goodness, the rand, I'd be panicking.
Yeah,
So knowing that it's the long game, then yeah, it's going to put me at ease considering
yeah,
all of these things. Yeah.
yeah, absolutely. Just always think long term, but be responsible about that thought as well. You don't want to say long term, kanti company iyasha when you look to say long term and you're not selling or getting out at the right point. Also, it drop in a share price, or like a decline in your shares or in your portfolio, isn't always the true reflection of what's happening. I know this sounds weird, but what I mean is, today you will see a 2% decline. Tomorrow you see a 3% or a 1% increase. The next day you see a 4% decline. The next day you see a 6% decline. If you sell it at that 6% decline, so you sell that share at it down at 6%, you are making that loss real. You only make it real when you sell it. Why I say this is because it's down 6% today, and that's what it's saying today, but tomorrow it's up 4%. Do you see now? We'll see. It wasn't essentially real. It was just showing you the movement and the performance at current rate, what is happening in the market. And so when you sell it at 6%, you realize that loss at 6%, and you're saying, I am saying I bought the share for 20 Rand or 10 Rand. I'm going to sell it at 4 Rand. I'm realizing the 6 Rand loss. As opposed to holding that share and letting it recover, right? So also keep in mind that every time you sell, you are realizing and you are saying, I'm making this loss true, because it's not true until you sell.
I get you. Thank you.
Are there any other questions around EasyEquities?
No, I've received the email. Just check my email. I have to verify my bank account. I'm actually really
Okay.
excited. I wanna invest my first 100 rand. Ngizobona ukuthi how it works. So
Yay! Screenshot share on the group, please. And also share that
yes.
it's your first investment. I'm so excited for you. Boo, 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 boo. I'm so excited. Like, literally, you just made my day. Like, literally, you've made my day. Yes, guys, please invest your 100 rand, even if it's more, like even if you're investing more, fine. Like, please send evidence that you have invested. So Guguzell, the other people in the group, to do the same, and all of us to make our first investments. Like, that is my goal with this program, is to get people to start investing. Let us look at Frank, the other platform. Yes, Knox?
I was about to ask about Frank because obviously I've been investing with Easy Equities for a long time. So
Yeah.
um I think it's best if I do it on the other platform because I'm very used to this one.
Okay. Cool. I'm just logging in my account and then I'll show you guys. If Frank, the only thing I don't like about Frank, which I have spoken to them before, is that it's not a TFSA. So that's why I haven't been investing a lot on Frank. I've been investing more in EasyEquities because my main hierarchy in investing is TFSA first, then anything else. So unfortunately, this year, my investment goals, Sana, are not where I would want them to be. I am saving more than I am investing, but that is because of the nature of my work. My income is it fluctuates, so I need to invest more than I am investing currently, but that's the season. And I think it goes back to the beginning of our module where we were setting our financial goals, we were doing the money mindset. I think for me, I had to be very honest with myself to be like, the season you're in is not allowing you to hit your financial goals. If anything, it's allowing you to hit a secondary goal, which is grow my emergency fund, which is what I'm currently doing. So, and that's okay. You need to be flexible with the seasons of what's going on in your life. And if it calls for you to invest, save more than invest, then that's what you should do. And that's why I always say that I do it in a 4-pillar method: the budgeting, which is the foundation, getting rid of debts, which I don't have any debts until obviously I have our home, and then saving. Yes, saving, so emergency fund, sinking fund, solution fund, and then invest. So don't feel pressure to invest now, or like build your investments if you feel like you haven't, gotten rid of debt that's stressing you. If you don't have any type of savings, focus on those two first, then invest, because investing is for the long term, the long haul, and it's got a more long-term focus. So I know, just sharing a little about what's currently happening on my side and my approach to things, and just being flexible and allowing things to happen. So this is my Frank account. Wait, let's go back to, let's go back to this guide, which is the step-by-step guide. There's a link to download. The link is an affiliate link. So if you use my link, I do get, I think, like 25 Rand if you invest using the platform. So just disclaimer. So yeah, if you use the link, I would appreciate it because I do get a little bit of something. I think anyone can get an affiliate link on their platform. I think once you're registered and everything, you do get that functionality. So even if you want to share with your friends or other people, you can send them your affiliate link and you can earn like 25 Rand. I think for the first 100 Rand investment, you get 25 Rand, something like that. So they will also do a process of figuring your documents. So they will ask you to upload a picture of your ID, proof of address. I think this is the one where you need to take a photo of yourself so that they can match your ID with your photo. I think Frank is the one that does that. And then after you're done with that, because now my account is active, you guys won't really see this, or maybe you will. Wait, let's see. I did this yesterday, so I think I should be able to see those process. So after you're done with that, it's going to allow you. Yes. Okay. So it's going to allow you, it's going to ask you some questions, which sets your risk profile. So who Frank, how you invest is determined by your risk profile, right? And the split between the two. So with Frank, it's split between two: money market, which is the cash portion. Money market is almost like a savings portion, it's more lower risk, very conservative. And then the high equity or the higher risk would be the top 40. So they invest in the top 40. That's all that they have on offer. I know they're introducing other things, but I'll just focus on that. So Lana, that is essentially what the app is doing for. So you'd put in your details, like your info, whatever. I'm just putting random numbers so you can see. I don't owe anything, but let's just say, and then you kind of respond to this. How will it increase? University, let's pay everything. So out of my income, total investments. So how much do you have in your investments currently? And then we'll give you like a result. So this result recommendation will kind of set your app to whatever. So it will be, I think they've got 3 different settings. This is the highest one, which is bold. And so bold investors it will set it like this. So you're waiting when you allocate imali, because Frank does it for you. So Lana, you see bold is cash, so nothing is allocated towards my money market cash. Everything is going towards the top 40 JSE listed companies. Now, this platform, right, focuses on that, and it does it for you in that way where you don't need to be picking. But what I want to say is I've invested in the JSE top 40 in my EasyEquities account. So it doesn't make sense for me to continue to invest in here unless this one has a different product offering, because then that's over diversification. Why am I investing in the same thing across different platforms and paying the fees? Because this platform has a fee, EasyEquities has a fee. Am I making sense? The only reason why it will make sense for you to use Frank is if you're not investing in the top 40 companies who is equities account here, and you want to invest in them in here. Then that makes sense because you're only investing in them once. But remember, this is not a TFSA. So any returns, any interest, anything you get as a return has tax implications. That's kind of the only thing that I want to highlight, or the difference between the two. What I like the most about this one is that I don't need to be picking anything. The system does it for me, and it kind of sets risk because I am. So whatever money that I invest or whatever money I put in will be allocated according to my risk profile. So the split here will then be determined by those answers that are answered, and then the split would be that. So what that means is that if I'm investing 100 Rand, that 100 Rand is going towards the top 40 ETF. Whereas if the split was 25-75, then it would be 25 Rand goes towards the money market, which is the Allen Gray money market, and then 75 Rand is going to go towards the ETF. Is there a question?
Sorry, Miranda.
Yes.
So the Frank only looks at the top 40. Like
Yes.
there's nothing else that you're investing in.
There are other products that they're introducing. So I know that they are introducing. So they've investing in the Satrix top 40 ETF. So which you can find on EasyEquities, and then the other one is the money market, which is the Allen Gray money market. That's the split that they have put it in. That's all that they offer. I know that they are introducing the S&P 500. I don't know when that is going to be introduced, but that is the thing about the app, is that as a beginner, some people prefer it because by investor, they don't need to know and pick and all of that. It does it for them in the back end.
Okay, I think I'm fine with EasyEquities then.
Okay, let me show you another thing that I like before you decide. So one thing that I like about Franc is that you can pick different goals that you want to invest towards. So these are kind of different ones. A lot of people treat this account or their Franc account as like the emergency fund account, where they want to save their emergency fund amounts. I personally wouldn't look at it like that, because I see Franc as an investment account. And for me, investing means long-term. I'm not touching it. It's something I'm leaving for 5-10 years. Emergency fund, I'd rather put in a savings account that is flexible. I'm able to access it when I need to and kind of get access to the funds easily. But some people choose to invest their emergency funds essentially. And so different goals you can choose here. So if you want to build wealth, family, or whatever it is, and then you can set it up. Oh, it's okay, I want to invest regularly, or I want to invest towards a target. So you can set a target. So if you want to invest regularly, you can set it up to say, I want to invest 1,000 Rand a month for 10 years, a year, 2 years, or whatever it is. And it kind of almost determines what your return would be at the end if you were investing 1,000 Rand a month every year for 10 years, getting that profile, because I'm a bold. But you can also adjust it. You know, you can custom adjust the split. So if you're not happy with what the app gave you, you can choose safe, very safe, which is very low. You can choose safe, which is that, and it kind of splits it out differently, or you can choose 50-50. It's up to you to decide like which one to choose. And then it will kind of set that goal for you. It will show you that that's what you're doing. And then you can track that goal in the app, which I think is quite nice, which is a nice kind of app addition, which EasyEquities doesn't really have. So you can track it in that way, or which is another app feature that I really enjoy, thanks, is a shared goal. So Lana, it's where you can invest almost like a stokvel. So nifake imali nonke nibe baningi. So you can create a shared goal. So you can either save and invest nibe baningi, and kuba khona one admin person, and then but everyone else has access to view. Yes, only one admin person has the ability to set up the goal, invite members, and update the investment strategy and withdraw funds. Everyone in the shared goal has full view of deposit, withdrawals, or investment strategy changes. Members can also track the growth and performance of the investment. What's more, you can access the shared goal view in the same app you access your personal investment goals. Okay, so this is over and above your personal goals. The shared goal is almost like a separate addition to the app. So let's say the shared goal is a holiday, so Europe holiday, and maybe you want to go on holiday with your friends, and you all want to put in money in one place. And so you'd add my members, put their name, their contact, their email, and then so everyone needs to have the app in order, obviously, to access the shared goal. And then you would add members, and then you'd set a target of, okay, at the end of the target, you guys are trying to raise 100,000 for the day, for the trip. You are going next year. Oh, wow. Okay. It's not allowing me. And then in terms of risk, then you can set risk very safe, which is like a 7% growth, which I think they would put it in the money market account. Yeah. Or safe, yeah, we'll kind of choose based on a risk. Essentially, if you're trying to save, I'd choose like safe, very safe or safe, just to preserve your capital and treat it like a savings account. And then it kind of splits out. So it's okay, for this amount in Funubi Saver, and for this date, with this type of return, with these number of members, this is how much you should be saving each month to get to that goal. So that's another feature that I really like, that I feel EasyEquities doesn't offer or have. And then you can do that, and then there's your goal. And then you can track the performance, you can track the contributions, and the other member also has visibility to see how much is put in, the growth, performance, but only one person is the admin. So only one person can go in and edit certain things that relates to the setup of the goal. But yeah, so that is the difference between EasyEquities and Franc. I just like Franc for the simplicity of it. Like, it's very straightforward. There's not much thinking or guessing, especially if you are going to invest in the Satrix top 40, and you want to just use one platform that doesn't overcomplicate things and have a lot on offer. You can go this route. They are adding more things. I know they are adding the S&P 500. I just don't like Franc at the moment because I am trying to max out my TFSA, and so it's not a TFSA investment. So for me, my main priority is my TFSA at the moment, but it's a really great platform to start. And then this is where the earn I was telling you guys about, where they give you that link and you can share with others and get yes, the refer and earn. So, and then they always have like specials and giveaways. Like, they give away 1,000 rand. I think the last giveaway they did was if you needed to invest 100 rand a week to be entered into a draw to win something, and then I think it was money added to your account and things like that. So they've got those type of incentives. They've got a learn platform where you can learn, similar to what EasyEquities has, but obviously EasyEquities is on a larger scale, just about investing. They write posts so you can choose. And then another feature that I really enjoy is they invest for your child feature. Excuse me, which EasyEquities does as well, where you can link your account with your child. So you can add a child account and you can put in your child's details. So the details and all of that. Let me see. And then you upload the details and then you can invest. So instead of opening an account specific, like a Franc account for your child, it can be linked to yours, and then you can just switch between your child account and your account, and you can start investing for your child, and it's linked to your main account, which I think is a really great way to start investing for ingane. So yeah, I mean, it's a very simple, straightforward app, but it's very, I enjoy it. I've used it. Let me see. Yeah, you can link accounts. So you can link accounts maybe with your spouse, with someone else who has an account, and you can, get access and viewability. I think this is great for couples to link your account with your partners, if that's your vibe. But yeah, it's very straightforward and simple. And then they've got different tools, like a budgeting tool where you can budget using this thing of theirs, where you put in your details and it kind of spits out how much you can have available to invest. So it's almost like calculates for you, it's okay, based on your income, your expenses and stuff, this is how much you can invest, or what they've estimated that you can invest each month. And then projection tool, which is really great also to see your returns. So you can kind of, yes, Nancy Signia S&P 500, which is the offshore equity fund. So Lana, you can pick who's okay, this is how much I have available to invest each month. So I can invest 1,000 rand each month for 10 years. I'm looking at, medium to high risk or medium risk or whatever it is. And then it kind of spits out an estimated projection, who's okay, in 10 years, depending on the fund mix, and what you've chosen, Lana, as a risk. So if you choose higher risk, then, it's going to be split 40, 40, 20. And then this is the annual return that you can expect to get. So that's a great one as well, to just kind of see on average what you can expect from investing in the platform. But yeah, that's Franc. Any questions?
On my side, guys, probably will be none today.
Happy to hear that.
No questions on my side as well.
Happy to hear that. Okay, guys. Well, I'm happy to hear that you guys are all good. I'm looking forward to your screenshot, Nolu, when you have made your first investment, and the rest of your guys' screenshots. I'm going to do mine tomorrow, so I'll also share. And then next week, we're closing off the conversation. So on Wednesday, we'll have a session, and that's where I'll be sharing with you guys the template that I've been working on, the investment template, which is going to be a great tool that you can use to track your investments, to manage your risk, to kind of just have a visibility of your investments. Yeah, so that's going to be next week's session. But yeah, thank you guys for joining. I hope you enjoyed today's session. And if you did, please share on the group so you give people FOMO who did not join tonight's session.
Will do. Enjoy your weekend, guys.
All right. Thank you. Have a good one.
Have a great
Bye.
one. Okay.
Bye.